So the recording is active. It means that we can start the session. We can open the doors to those of our attendees who joined us. That's great. Thanks a lot. Thanks a lot to those who joined us. Welcome. As you probably heard, AI is the new blockchain, which was the new Web3, which was the new ICO, yet somehow Axel still runs the banks. Welcome to our live webinar, where we dive into today's biggest tech shifts in banking and finance, and their risks and rewards behind them. Before we begin, let's introduce our subject matter experts today. Yulia Varnikene, please correct me, Yulia, if I'm pronouncing it wrong. Chief Operating Officer at Capital Box. Yulia leads operations across five EU markets, driving digital transformation, and being a member at Women Go Tech. Yulia champions innovation and inclusive leadership in fintech. Welcome, Yulia.
Thank you, Renata.
Another speaker at our session today, Rich Bialik, a CEO and founder at Bialik Group. Rich is a C-level executive with over 40 years of experience in technology and product development, and including leadership at Visa, Simeon. Rich also advises fintech and payment companies on entering emerging markets and focusing on regulatory digital transformation and funding. Rich, welcome. Thanks for joining, and really long time no see since our last discussion.
No, thanks for inviting me. I'm pleased to be here. Looking forward to a great discussion.
Sounds really great. Then, those who joined us as attendees, send your questions to the chat and we will approach them within the session. Julia, the first question is to you. Do you love money?
Oh, who doesn't? Of course.
Rich, and what about you?
Oh, it makes the world go round. I think though it's what it can help you get. Don't make it the goal in the end, but yes, it's a fuel that drives our economies and is key to our lives.
Absolutely agree. There is nothing to disagree with, and I'll be straight. I also love money because it buys freedom. Vacation, a new flat, a vacation, or the latest gadgets. It sounds like a bank promo, but that's life, to be honest. And inflation and high interest rates are forcing people and businesses to rethink how they handle money. Yet, if you can't pay now, banks and NBFIs will definitely offer you buy now, pay later plan with all this digital finance. To the point, the webinar itself is connected with the past, present, and future. And when we are talking about the past 5 years, finance has gone from cautiously trying digital to going all in on AI. Now you can get a loan with your phone, no humans needed. This is the reality. We also see the modern transformation of SaaS models into banking as a service. It's moving into banking as a platform, where banks plug in third-party tools to improve onboarding, fight fraud, and improve clients' retention. Yulia, with your deep experience in finance, digital finance, in servicing small and medium enterprises, in your opinion, how tech evolution over the past years has shaped the way your brand operates day-to-day from onboarding to retention?
Yeah, so we have started to operate 10 years ago, right? So, and in the past 5 years, this is a crucial changes happening in the markets. So as Capital Box, we have chosen, the easiest platform to, to scale up and to be fast in regards of the fast and efficient in regards of, customer onboarding and customer success with us. So we use Mambo as a platform as an example, right? And we use Salesforce as a customer, platform for retention and for the sales and for collection, right? So we use easy approachable systems, right, to build our infrastructure. So we do not have a legacy. That's our benefit in regards of the systems. But what we also see, the market itself is really shaping very fast. So, and the new players, for them, it's always now it's much easier than we had 10 years ago. It's much easier to join the market than it was 20 years ago. And the smaller banks, the smaller fintechs, we have like more than 250 fintechs at the moment in Lithuania, where I came from. So they are very competitive because they can take this banking as a service, banking as a platform much faster and introduce solutions much faster with all the technologies. While the older banks and the older core, they still rely on legacy. And for them, you spoke about the money. The first question is a huge amount of money, right, to change the system. So approaching the growth from like 5 years to now, right? So the more faster and efficient services would be built with a more platform-based structures and infrastructures, right? Like, let's get rid of a legacy system, so that's still good, but let's keep it, faster going, faster ongoing. But system is not the only one, right? Not the only ingredient that we might see. The open banking has enhanced the infrastructure a lot. We still rely when we do business lending, we currently rely a lot on the PSD2 data, but we still see that, not all of the banks are prepared for PSD2. Even now, the PSD3 already coming into the markets. But all these new regulatory technologies are also streaming the businesses. We can say that regulatory, it's stopping, but at the same time, it gets another flow of additional business ideas and ways how we can aggregate the data and how we can utilize and make our customers more successful with more efficient solutions.
Fully agree, and thanks a lot, Yulia, for sharing your thoughts. It sounds like you know the market well. Regulations, compliances, and everything connected, and this really allows you to penetrate new opportunities. And we would also consider today a digital approach, which is really now mandatory, especially when we're talking about low market entrance. Low market entrance allows to enter more market players and creates this high competition in the market, right? So for banks, those who are wishing to compete across all consumer segments, digital should be kind of a must feature. And in accordance with the World Bank report, as of now, not as of now, but between 2011 and 2021, the percentage of adults with a bank account, regardless of whether it's traditional or neobank, grew from 51% to 67%. So we see, and we can see it as an increase of more than 1.6 billion customers thanks to digital onboarding. So, Rich, a question to you, a person who provides support to businesses who'd like to start to penetrate markets and finance and banking. With your background in payments, tech, and inclusive finance, how do you see new technology has changed the ways banks and NBFIs offer the services and onboard clients right now?
Well, thank you, Renata. The changes I've seen, I think, really were latent in the markets, and then COVID really made a lot of changes. I think it was a catalyst for the digital transformation and enabling technologies like AI and blockchain to take a lot of friction out of market entry, and that's exciting. It's given new entrants a way to leapfrog over legacy companies. But while you saw that that freedom coming, I think there's still quite a bit of friction that has to be overcome, and that's when you deal with regulation. And it'd be interesting to compare the EU and a single market and how that's enabled the ability to capitalize on these new technologies, as opposed to markets I'm familiar with in Africa, where you have 54 countries, but you don't have a centralized regulatory authority to help cross borders. And also then look at the US, where maybe it's not so much regulation. You do have quite a bit. The challenge there is always overcoming legacy. You have players that have been well in the past, and change is disruptive to them, and they don't always want to accept it. So if I look at this, I see, looking back over the past few years, the emergence of AI and blockchain have engendered a lot of capabilities. But what we have to do in addition to that and you can't just rely solely on the technology, is understand how you're going to navigate the regulatory environment, because you can have the best technology, but if you hit a regulatory wall, you won't go to market, or you'll be stopped from advancing in a market. So I see you need to have the right GPS to guide you through the regulatory, and then you need the fuel. Funding is still a major issue, from market to market. There's been a lot of disruption in financial markets, and I still see a lot of money to start companies, but growth stage, there's a bit of a gap, particularly in the emerging markets I'm familiar with. So what we're beginning to see, and I do look to Europe, and Julia, to your experience, I think a lot of the innovation we're seeing around the application of AI is happening in Europe, I think. And I think the rest of the world can.
We've lost reach for a couple of seconds. Now we can hear you. Yep.
Okay, good. I'm sorry. I was just saying, I think a lot of the innovation in AI is coming out of Europe, benefiting from the EU and benefiting from leadership from companies like Julia's, and the rest of the world can learn from that.
Absolutely. Thanks a lot, Rich, for a vision. And it's great that both of our speakers today are presenting different corners of the world, because in this case, we can really overview different environments and compare them to each other. Okay, that's absolutely great that the market still needs regulations, requires it. It means that everything is under control, right? And we can still monitor what's happening and how it's going and what's next. Yet, when we're talking about what's happened already and how it has changed the current landscape of banking and finance, clients onboarding is easy, but the real challenge starts after. Business isn't a marriage, we all know about that, and neither is client servicing. But when it comes to debt collection, it can feel like a massive repeat divorce. Over the past decade, banks and NBFIs have upgraded how they manage debts and disbursements. And the real challenge starts with repayment, because using the wrong collection methods won't just cost you the payment, it might cost you the customer too. Yulia, over the past 5 years, many of your competitors in Europe and beyond have tested everything, from machine learning to robotics, just to personalize and improve their debt repayment. Maybe you've heard about SME Go in Lithuania, October, formerly known as Landix in France, and others. When it comes to collections, what progress has Capital Books made over the last decade, and what's actually worked for you?
The thing that actually worked for us is the ability to talk to our customers. Despite all the AI and machine learning models, which of course are very important, and we have plenty of those, but we deal with business customers, right? And sometimes business is not going well. The COVID hit and the business doesn't go well, right? So you can't simply push customers into the model when something is crucial is happening for them. So the ability to talk and still keep people to be able to understand customer problems and help them to navigate through their financial situations, because we deal with the SME segment, right? Let's be honest, our customers can be, a small bakery, and the things that they know how to do, it's not the business, it's how to bake the pastries, as an example, right? So they're not such professionals in the finance where we are. So we help them also to navigate, and we help them to find, the best, like the payment plan and the, possibility of rescheduling the loans and possibility to create the payment plans. And this is what stands out, right? So we can say we need the money, of course, but, this is, how we get the other loans as well, how we get the payers for other customers by getting the funds back. But at the same time, if you simply force customers, by default and, to the court, this doesn't work. And, then we have another problem of retention, because business is, it's like American slides, right? So sometimes it goes up and then it goes down. It can be also very seasonal, right? We know we have businesses in especially like Nordic markets where, it's in winter time, there are like lots of business, and then the summertime it goes down, right? So you need to figure out this right path and try to approach may be on customer revenue, and connected to the customer revenue may be connected to the customer industry that they're in. So not having, just one rules for the customer, that with what works for us. Very simple, very easy as it sounds, but it's, just one ingredient. Still stay human when you treat business as the equal to you.
Thanks, Yulia. Sounds like you've tested a lot, to be honest, after you came up to this final idea of what works best for your customers. Exactly. To be added, from emerging to developed markets, banks and NBFIs, they must tackle bad loans to maintain liquidity. This is a must. Or your business will die. And if we approach the experience of the United States of America, for instance, JP Morgan Chase, they use AI, reducing manual work by nearly 90% and improving debt management. Here's another example, by the way, from Africa. The company's name is Mcopa. They enabled $1.5 billion in credit across 5 markets, and they utilize AI to build credit profiles and manage debts. Rich, collecting from high earners is like taking candy from a baby. And what about emerging markets? How has that collection evolved there?
What I think a lot of it is been enabled by the way the people in these markets engage or communicate. It's the phone. Your bank is in your hand. So much of it is mobile apps. And the reason I bring that up is that it enables a lot of digital communication, and I think a foundation for a lot of the way African fintechs, those that are lending money, come at it is with a very low cost approach. They're very efficient. The margins are thin. You have to be very efficient to deliver a service at the lowest cost possible, and that's enabled them. And they build their platforms with that mindset, and that carries over into the collections and the lending side. I think, as Julia said, we're finding really the lending is occurring among small and medium-sized businesses. And a lot of specialization is going on, particularly drawn to enterprises that are focusing on women and small enterprises, and how you create a cycle, an iterative cycle, where it's you try to learn as fast as you can. And I'll go back to the U.S. for a while, a few decades back, if you let me travel in time. I started with credit cards with Visa, and there was a company called Capital One that started in the 80s. And what they did very differently from competitors like Citibank and Chase was, rather than doing a solicitation for accounts once a month, they were doing it weekly. And they were setting up not 2 or 3 cells, but dozens of cells to test. And what that meant at the end of a year, where a traditional player might have 12 data sets to analyze, they had thousands. And the power of that data enabled them to improve not only their ability to gain customers, but to manage and improve collection results and manage delinquencies. And now they're one of the largest issuers in the U.S. today, and a bank today, and I think recently acquired the Discover network. So I bring that back to Africa, and what I think is key is just getting data and be able to get enough data and analyze it to help you work hand in hand. How are you sourcing customers? What are your best risks, the best markets to gain not only new customers, but those that you know are going to stay with you and pay with you. So when it all comes together, I think it's really the importance of data, the quality of data. And in the emerging markets in Africa, I'm seeing, they're good at collecting it. They've got really good front end technology. Where there's a gap and opportunity, I think, is for third parties to bring in some of the enterprise tools, really the AI tools, to help them power that. I have no doubt over time African fintechs will be able to develop on their own, but I think immediately or in the near future, it's leveraging what's been learned in markets like the EU that can be applied to this kind of lending, these kinds of payment opportunities in Africa.
I think that's very important point mentioned, that you need to know your customers, right, in regards of segmentation. So not all the ingredients work for everybody equally, right? So you have to find those customers you want to keep, and to keep on retention, and you always act with them slightly different, right? And
Right.
That's one of the main points how you need to act in the future. Of course, not to treat everyone at the same level.
There's two very different, like I'll call a bimodal distribution. In you have one set of customers, could be the women farmers in Kenya that are growing maize, and there's just small amounts being lended, but you want to do it, and you have to find a way then to grow it up. But you also have merchants. I remember from my days with my processing company working with, of all places, it was in Angola, and it wasn't a few dollars; it was tens of thousands of dollars, even hundreds of $1,000s being loaded on a prepaid card, and they were using it to buy supplies in Dubai or out of Shanghai, doing it all via the product we had. So, right to your point, Julie, it is, understanding your segment and applying the right tools for that. What's going to work for managing that small landholder farmer in Kenya is not going to work. At the same time, you want to make sure you're not always developing a bespoke process, because you're never going to leverage your operations. You're always going to be trying to chase that, and it's your margins will hurt. So maybe that means you don't go after certain customers. You understand what you're going to be good at, and understand what you can do to leverage the investment in technology that you've made.
Rich, thanks a lot. Your experience is a treasure. Be honest. Be honest right now, Rich. This is another question to you.
Okay.
What's the biggest nightmare you've had with banks and NBFIs collections? The one that still makes you cringe?
Oh, it really become to just concerns about really fraud risks within their systems and platforms, and making sure, I guess it's maybe not directly a collection issue being not being able to pay, but concern about bad actors breaking into banking systems, and how do you protect and authenticate that this user really does have permission to get to your system, that they're not creating digital money in some way from the platform. So my nightmares really come from fraud and bad actors breaking into the system and finding a way to either drain funds, or the challenge is the real scary thing is they can actually create money and make up digital money that they can use to get physical currency out somewhere. And when you try to clear and settle that, you've got nothing in the bank to pay those merchants or those those other stakeholders.
Thanks a lot for being honest. And by the way, here is a good question from the chat that's connected to the fraud risk detection. Yulia, please join to this discussion. Regarding the question of fraud, how are banks and fintechs leveling up their risk and compliance game to keep up with smarter fraud tactics, especially now that AI and RegTech are in the mix? So we will definitely come to the point deeper in the next part of our session, but right now, maybe from a very high level, would be really interesting to listen to your thoughts, especially after we connected the part of collection, which is connected with potential fraud.
We are we are efficient in regards of fraud detection, right? What we see is for the SMEs, one of the most actual or the most often fraud, it's the friendly fraud. Those who basically, some family members taking your phones to do the EIDs and to verify themselves, take the money on your behalf, and don't share your private data, right? This is like never ever do it, but this is happening, right? This is happening in business. So we have set a lot of actions to minimize the frauds, but those that we see, it's not the externals, somebody from some other countries trying to break in, but it's mostly the family members, the parents, daughters, husbands, and so on. And at the same time, it's very sad that these things are happening because it's very close area that you are in, and that you make the fraud, right? But this is one. And another point is actually this is the part of the onboarding, right? When we have to detect, but also, in the scope of onboarding, like with PSD2 data, right? We can get much more insights on the possible frauds and chains of money that previously were almost impossible to figure out in the easy way, right? We know how the money goes. We know where, if there's like other companies, other bank accounts, other like structures. So it makes the things much faster to detect and much accurate to detect, right? So technology makes it easier, but from time to time when we speak to customers is as well, rise up when people, close, the phone and they say, it's actually, I have been speaking not to the same person as I spoke before. So even this kind of, actions is happening. So it's sad things happening, but lots of, good things in regard of technology, what helps to improve the fraud detection. It's also in the road now. And yeah. AI is the one, so just like one ingredient that will help us to solve this issue, or at least to minimize. Probably we won't solve it at any time, but minimize would be a good point to do.
Thanks, Yulia, for the insights, especially from a real market, from real business. It's important. Really remember that your personal data is yours. Do not share it with anybody else because it will be used against you. Rich, what's your vision for this question?
I'll take you to the past too, in that sometimes the technology is important, but there's also basic processes. And in some ways, we're doing what we had done 20, 30, 40 years ago, but using new technologies that there used to be in the early days of credit cards, you had a lost and stolen list, but it was a printed piece of paper that might have been a week old. And you had to check it and see if somebody was on that, or a card was. Now we have it instantaneously. So that's good. You also have processes where you're trying to authenticate a user, or approval for a process, a two-factor authentication, or a maker checker, and that could be as simple as two people, checking off a piece of paper. Now we can do it digitally. So I think it's bringing together. These are not issues that have just been discovered because of our new technology. They've existed for as long as there have been payments. So I think it's, do you have good processes in place? And that way, I think you can look at, we talked a little bit about regulatory and licensing and compliance. That can be a hurdle, it can be a burden, but it can also be a tool. They're there for a reason. And I would encourage, I guess, to complement what Julia is saying in terms of technology, put it hand in glove with your processes, and your regulatory and compliance function should work together with your technology team, so that they're not surprising each other, and that you understand through that the compliance can raise up both external and internal flags about where you have risk. So kind of use that regulatory and compliance function to help identify where you have an issue. And then you can bring technology in to address it. So think about that, those coming together, and don't try to manage them separately.
Fully agree. And moreover, when we're talking about the process of fraud detection, right? Every company is aiming to create a smooth experience for their customers. So when it comes to creating everything under one roof, in commerce, maybe you heard, it's called Amazonization, and fintech, it's embedded finance. When financial platforms, they are evolving into one-stop shops, offering everything from buy now, pay later to insurance and banking. And with the help of RegTech tools like AML, KYC, and GDPR compliant data protection, clients can really now onboard and engage smarter, all online, with 100% compliance and data security. So this is important, and it's great that we got this question and we approached this question within the first part of our discussion. We are moving towards the next part of what's happening right now. What are the main challenges and opportunities in the market itself? Those who are interested in international reports, Accenture's annual research shows consumer banking is the sector most likely to be disrupted by fintechs. Because in fact, over 40% of consumers struggle to distinguish between financial services, their brands, and already around 58% have acquired at least one product from a new provider in the last year. So any challenges give the space for opportunities. Yulia, for sure you're not in the consumer market, you are in the business segment with your offering. Yet with that in mind, what's your strategy for NBFIs to take your share of the market pie?
So we definitely are already in this game, right? So we are also the part of the embedded finance players where we cooperate with partners to bring our products closer to the customers. It's surely, the great opportunity not to decrease, not only to decrease our acquisition cost, which is, going up and up each time, but it's also, bringing the customer the less visible onboarding as possible, right? Because usually when we talk about embedded finance, we speak about onboarding fact, because the rest it's still happening on your side as in the banking, right? So you still continue to cooperate with customers as through the banks usually, or through the fintechs, but the onboarding matters. How do you take your customer, right? And it's great having these opportunities to, navigate and find the different partnership opportunities with totally unexpected businesses, right? So for us, it's very important we can to find, and we have these partners already where you can find us. You don't even know that we are here, but we are. But so make it this business landing invisible, right? You understand you have signed it, but you do not need to think that complex, that that you would structure your thoughts and you need to create a business plan. No, if you as a business need to buy a chair from IKEA or some other provider, you just go and take it. And if you need to pay in in 12 months, this is how it works, right? It's also the part of the like buy now pay later, the part of the embedded finance. So the more we go, the more we will see this kind of partnerships. And the challenge is the growing and the acquisition costs, and also the defaults that we can see, right? So it's also the point, segment the customer. Just go invite into the partnership that's doesn't gonna work if the partner has the wrong customer segment, right? So you need to figure out who is actually like your best partner, how much can you earn from it? Do you share the revenue model? Maybe do you share, do you pay by lead? Do you pay by, by opportunity of selling, or by the contracts or something? So, but this is another stream that you will have, and that will enrich your customer base as well. And usually with embedded finance, you also get another side of the data which you probably didn't have. Like from e-commerce, you can get probably the previous history of sales, which you can also try to underwrite customer based on the data you have never seen before. So it's another point of learn how customers are doing, what they are doing, right? And what it is important, as example, for this customer, for their risk profiles, for their industries, more than it was before, just by seeing their financial statements and the balance sheets. So you can get the flavor of the actual data.
Agree, Yulia. It sounds like really solid strategies. And by the way, talking about embedded finance, we have another question on our chat. We will get back to it closer to the end of the second part. Yet, embedded finance, maybe you heard, this concept has led to the rise of super apps, which are especially popular in South Asia and Africa. And these all-in-one platforms like M-Pesa in Africa and WeChat in China combine really unexpected partnerships, e-wallets, e-commerce, social networking, even gaming, insurance, and others. For instance, WeChat, for example, already boasts 800 million active users. Can you imagine how popular it is? And with 1.4 billion unbanked adults worldwide, super apps are making financial inclusion more accessible. I hope you'll agree with me with this. Rich, based on your experience in emerging markets, what innovations are most effective in driving ongoing challenges of financial inclusion?
Well, you hit a key one. It is that mobile phone, those apps. I think the African markets, and they're different, whether it's Egypt in the north or you've Nigeria, Cote d'Ivoire, South Africa, Kenya. The market really has that's the way you connect with your customer, and you have to design the way you communicate through apps. That's the language, and you're right. That technology has opened up markets, and you don't have a lot of legacy to overcome. So it's more of wide open. When I think of embedded finance, I think you're more likely to see these neobanks or e-banks emerging in some of these African markets. I've been in conversations with a Zambian entrepreneur, Chilufia, a woman leading, it's I think her third or fourth business, but it's an e-bank out of Zambia called Ishanti, and you're packaging it all together. You can quickly deploy and go to market. So the technology is, I would say, easy. The technology is there, ready. What it is forcing you to do when you're I'll take Zambia for example, could be other African markets, is you better make sure you've got partners that can help you with licensing and regulation, and that you've got funding. You don't want to run out of funding at the next key stage. So that's where I've seen other entities come in. I'm working with a company, High Water Bound, which is addressing that specifically to help you work through the licensing. Maybe you need a part-time compliance officer to come in, or looking for funding outside of traditional VCs. So you come back to it in these emerging markets. I think they're open to it, and you're already seeing it taking place. I think the biggest risk will not be that the market's not ready for the technology, or that the companies can't develop the right apps, but will they have the funding to get to the next stage? And I think the answer will be yes, but it's going to take uh, some changes in from the way things are funded right now. We can talk about that a bit later. And then just back to the U.S., I think the embedded finance is going to be, it's more focused. What I see is more specific opportunities, and a lot of them do come around payments. Maybe that's biased by my background, but I'm seeing with the emergence of stablecoin, a strong business case for a cheaper way of remitting money, using a stable coin that can be done in a faster, quicker way, and eliminate some of the volatility when you're trying to exchange money with a friend in Nigeria, where the naira has been so volatile. So I'll point that as a set of contrasts, not 100% different, but in Africa, new banks coming out. In the US, it may be more functional, and you may see these remittances and payments, and maybe some small business lending being the start for bigger embedded finance enterprises in the US.
Thanks a lot, Rich, for your vision. For sure, all these questions related to inclusive finance, they still have a lot of challenges inside on the one hand. However, there are a lot of opportunities on the other in terms of inclusive finance and those who are willing to provide embedded finance to their customers. Still, we understand that it's a huge rat race among banks and NBFIs and client acquisition, right? And today, more than ever, the customer is the king. He dictates the standards for banking services. We all know the saying, a satisfied customer is a loyal customer.
Mm-hmm.
And to grow this loyalty, financial companies bring a lot on the table. Yulia, Capital Books has been around for 19 years, since 2006, right?
Multitudes has been. So Multitude is the part that we are the part of the Multitude group. The group is 20 years old now, so we are 10. So the Multitude has like consumer business, consumer lending area, the consumer banking area, and we take the SME
but still,
segment.
it's a decade. It's a decade already in the market.
Yes, exactly.
A couple of international crises, you successfully overcame them without revealing too much of your internal playbook. How have your tools to acquire and keep clients evolved over time?
Drastically. But at the same time, we started digital. We have never been, so the entire group has the pure digital background to go for the customer, right? Even 20 years ago, there was like no office you can come as a consumer to take the loan, right, or to sign for the banking. So we were always digital. And when we started as a B2B, we also started purely digital. So if we, reminding how this happened, like 9 years ago, or 8 or 5 even years ago, where by requesting people to prove that they have the money in their bank accounts, right, they would send us the photo of the cash. In their table, on their table, right? By asking them to send a photo to verify their identity, they would send a funny photo of the, we had the person, he sent a photo of him wearing some horse hat somewhere in the mountains. So, from the onboarding perspective, having this all pushed regulated action as PSD2, as EI does, right? So this is what has changed a lot, because you can imagine the amount of fraud that could happen in previously, even with also lots of technology by screening the passport, but it's a huge cost as well of the screening, checking all the the databases and trying to figure out all the details. Well, now it's so well presented and so easy, right? So that customer doesn't need to make a photo of the cash. So he just connect to his bank account, and it's easier for both sides, right? For the customer and for us. And it's, taking out this layer of, the fraud possibilities, or minimize the fraud possibilities, minimize the compliance issues, because we know where this data comes from, while sometimes we like also having the cases where entrepreneurs having multiple businesses would by accident, right, send us the different company financial, like bank statements or balance sheets, just because it's you have 5 businesses, so sometimes accidents can happen. So now with the current processes, it's much more easier even identifying these cases if this is happening, but they're happening more rare because we have processes that prevents this action to happen. So if looking right from 10 years digital, it was some things that we remember, it is more funny things, but now it's more straightforward, more clear, more crystal, and it's much faster for each way. But it all comes as well, it all comes with a price. Even defining the processes through 5 markets, trying to figure out the regulatory environment in these markets and to comply to all, it's also takes time, and it's take a lot of effort to make the processes as much aligned as possible, so it would be easier to maintain and support as from the from the business perspective.
Thanks a lot, Yulia. It's kind of like, it sounds like you really do a lot, even more than expected. You're one step ahead of expectations of your customers, and that's definitely, it's not about your company. If you love them, let them go. When you love your customers, you value them, and you go all in to give them the best service and support possible, starting with digital, ending with good data protection and anti-fraud activities on your platform. Rich, what strategies do you usually recommend to your clients from banking and finance when it comes to customer acquisition and retention?
I think when you're looking up, get back to what is the use case you presented to your customer? What problem are you solving for them? And is that a value to them? And I just thought back to a conversation I had with an entrepreneur earlier this week, talking about their technology, and it was a stablecoin company, and you could see really excited about what they had. And then I asked about, well, how are you going to market this? And the money you're asking for your marketing, how are you going to deploy it? And they had the pieces, but the missing piece was, well, what problem are you solving for the customer? What is the use case? Because if you do that, then you're understanding where you're creating value, what resources you need to deliver that. So when I look at that, and I think of with the use cases well developed, what you have are multiple ways to keep and capture the customer, retain them, have hooks into them. And I mean it in a good way, that if you want to have your customer really engaged with your platform, and we look for ways. I'll think back to a company where we were providing payroll services for the maritime industry, and we didn't produce the payroll, but we fulfilled it through a prepaid card. But what we did is made it easy for the customer to work with us. We integrated with their HR systems, and that took work out of their team, but it also integrated us. So it was hard for them to pull it out. If they could find another supplier perhaps, and maybe they could do it 10, 15, 20% cheaper, but they'd have to reintegrate with their HR system. Now, it doesn't mean you can abuse the customer and not care about service, but find ways to tie into them, find ways to make their life easier, find ways to, in some ways, anticipate their problems. And when you come in with solutions, make sure you have room to as well. So I guess I'm getting to more of the design of it as opposed to the day-to-day delivery of it. But those are the things we look to do to make sure we've designed it well, we're solving their problem, and then we've become part of their company as well. So it's harder for them to exit.
Fully agree, especially when it comes to retaining your clients, right? Building relationships and doing everything to create this loyalty. And talking about client service in banking or finance, digital is all about omnichannel, and that's why we're talking a lot about platforms, right? And whether clients reach out via mobile or app, it should feel like picking up a conversation with a trusted friend. Regardless of the channel. And going digital also means automating processes, often with AI. However, some people still value human interaction for certain steps in the process. And before our webinar, we already discussed that. Those who heard about Klarna, raise your hands. Klarna tried to replace their support team with AI chatbots, but it backfired. Now they are really rushing to bring human agents back on board. Since running for cost reduction, they ended up having a lower quality. Yulia, what's your vision for a cost reduction challenge based on an AI-first approach?
So AI is an extension, right? If we, with the help of AI, can help our employees to support customers faster, maybe aggregating some solutions that we can, by analyzing the data, like behavioral analysis, right? The risk analysis, much faster than the employee which would be doing it, right? We definitely do it, and this is what we're working for. But as mentioned in the beginning, we still talk to our customer. We have the fully automated processes if customer wants, so they can choose from, fully go wild and automate. We have been we have onboarded the business customer in 8 minutes with, from the first point of contact, from his first application point till the money has been paid out to his account. So this is how we can do the full automation AI. But at the same time, it's a very limited amount of business customers who still want to rely on the fully, digital decisions, and they still want to validate their financial situation. They still want to see the offer and to speak about this offer. And what we saw, actually, even before AI, we have implemented a very easy thing, which everybody has, is the chat in the website. Almost very small percentage of customers would do it, because the business customers, when they need, sometimes they call. If you want to solve the problem, you wouldn't chat 20 minutes to figure out. You will call and solve the issue in 2 minutes. And I think, for entrepreneurs, this is the way to go. If they want, to book a call with us, this is, all possible. But, it's not, don't go wild, with AI and digitalization, automation everywhere. Know your customer, because if this doesn't work for you, you can be the unicorn which will bring the hype, but you still need at the same time to maintain these customers who will value you for the customer service that they had the story with you, right? So they can rely on you. And this is the Rich previously mentioned, bringing the value, right, for the customers, for your clients by, connecting. This is what matters. So of course, there are lots of projects happening. I have the huge roadmap that we, want to do and want to achieve with everything. But, you still need to filter out if this will work, if this will really bring value both for you and for your customers. If that's only matters for your company, but the customers won't do it, then you will again raise your acquisition costs because you will lose those customers which were loyal to you, which valued the customer service. And we did the survey last year for the Swedish and Finnish markets, where the biggest we asked, what is the biggest issue with your current banks, and like 60 to 80% say this is the customer service. Right? This is not ability to, to contact somebody in your bank, which is, quite insane, right? You put the money in your bank, you took a loan, and you still you get with, you are just typing some questions, answers, you just want your problem to be solved. So this is where we, step in still to matter, right? Still to be relevant to the customers and, solving the actual problems and not just relying only on purely like technological automation stuff, which looks nice in the process chart. Well, everything looks nice, but it's when it comes to humans, we're still partially rational. So, we need to admit it.
Thanks, Ida. Fully agree. Full automation, 100% automation is not for everyone, especially when we're talking about B2B segment of customers. Yet, speaking of cost efficiency, we can touch base on consumer segment. Let's better look at an example from outside. Nubank, a fully digital neobank from Brazil with over 100 million customers across Latin America. According to Accenture's report and investigations, Nubank's average operating cost per customer in 2023 was less than $2 a month. This is a strong case for how digital banking can both lower expenses and expand access to finance from the bank. But again, AI and full automation is not for everyone. And this is the truth, especially when we're talking about real implementations, and Capital Books and Julia's experience is the proof for this. Rich, you sit right between finance and tech. How do you see tools like AI and digital channels helping companies cut costs and work smarter?
I think one thought is that you don't have to make it, in some ways, keep it transparent to the end customer. They don't need to know what AI you're using. And to bring that home, I'd say we've used AI to help our customer service reps be more effective, that they have tools that help them get information more quickly. It could be helping them being trained up on a new service. So AI is helping them as customer service reps on board more quickly, using it for translation tools when necessary, because we deal with many different languages, French, Portuguese, Arabic, etc. So AI initially becomes internal a tool that we use to help make our employees more efficient. Second, I think it has to deal with a lot of, again, coming back to, as Julia would said, segmenting your customers. What will they accept? Not everybody. Some may really adopt it. They want that automated self-service. Others less so. So give folks an option or an off-ramp if they don't want to be, AI directed. And then I come back to it, and I think about customer service is, and again, Julia has used this word, know your customer, what their expectations are. A very different thing to approach a customer from a bank in Nigeria. You have a customer service issue, they'll send you an email, and if your approach is, well, let me come back with a solution, that's too long. They want to know that you got their message. So if you get that email, AI might help you say, great, we've got your message, we're working on it, and you could send that in 5 minutes, and that satisfies that customer. Meanwhile, then after you've given that response, you can go on working, solving it. Customer maybe in Chicago here wants to know the answer. So when you talk to them, they want to have a solution. So you deploy that differently. You may focus your AI in helping you solve the problem, get to the right root cause, and then come back And then you can decide whether it's an automated response or whether it's a live person delivering that. So when I come back to it is, use AI to empower your staff, use it to understand what their customer expectation is in terms of when they want a message and how they want it delivered. And then you can use AI to help you with the response, whether it's just finding the right prepackaged answer or helping you compose the answer.
Yeah, I
Fully
think,
agree.
it's also a very important point, the segmentation and answering. So we also like having an experience of bringing the customers the answer too fast doesn't go well as well.
Right.
Because then the customers, some customer segment would say, you spent too little time, to solve my problem. So especially when there is like not positive or answer, not the answer they expected or they wish to. So
Yep.
this is, still like knowing the behavior of the customer, understanding the business, and understanding psychology of the customer matters, right?
Yep.
So I totally agree. So for the, fast pace, for consumers, this is, one path. For small businesses, there might be, another path. For maybe, the business from construction and the business from HoReCa business, this might be a totally different path. What AI brings us the ability to personalize these flows when we have, right, which, to analyze the data, faster, summarizing the information, of 10 pages just, in 30 seconds, which, the person never would be able to do so. Definitely this works, but you first need to know what you're dealing with, right? And then how to help to sort this out.
Fully agree. There is nothing to disagree with, guys. And when discussing new technologies, we can't overlook the challenges and risks they bring. We already talked a lot about data, so we want to take it and we won't cover it within the second part of the discussion. However, during our visit at Dubai AI Festival this year, it was clear AI is all about adapting or being left behind. And one key takeaway we got is that AI revolves around data. And we did our internal research. Over 50% of our European clients use data for making decisions on sales, marketing, supply chain, and fraud detection. So with that in mind, this is a good question towards a concept which is called responsible AI. Right? It's not only about protecting clients' data, but it's also about designing and applying data in ways of transparency, fairness, safety, and others. And maybe with all this context, it's better to approach another question we got to our chat, which is connected with embedded finance. However, it's also about this responsible and responsible technologies. With embedded finance and open banking taking off, how can fintechs keep the user's experience smooth while staying on top of all the growing global regulations, and especially regulations in terms of data protection and responsible technologies, kind of AI? So this is the question to you, Yulia and Rich.
I don't see that something is changing that much. It's still changing. The US are, let's say, much faster than you with all the countries that we have, right? So while we start to have the regulation in European wild, right, it takes time. So you can start adopting this like technologies or regulation or compliance already before, because you will know that something is happening. We know PSD3 is happening, so banks can already start adapting to this. What is the worst part is, the majority never starts before it's actually announced that this is what will happen in the near future, or when they actually have the date. We all have lots of things on the plate to do, so that's fine, that's obvious, but we could be more prepared. And the regulation is not happening alone, right? It's happens from the issues that we face. It's from the situations that our customers are in. It's still with a combination of communication with the central banks, with the local banks. So it's not coming standalone with, out of nowhere. So we know what is happening, right? So we need to think, how do we change it, and not to be past, but to think forward, how this can be evolved, and how to help our customers in the process. I don't see the huge changes that will come during this year, as an example, for our customers, right? So we see one of the things that I really hope, or I really wait, is the digital wallets, which I think will be a huge change, but a huge change for the better, right? Still, for the easiness of the customer to provide the banks and the fintechs the data much in a more secure way, in a more transparent way, in their own way, because then with digital wallets, customers will know what they exactly share, and to whom exactly they share, and for which kind of period which they share. So we know that this will come, so we can either already start adapting to this, or knowing, so planning about that, or we can wait till the actual regulation will take place and then just do the things. So for this year, nothing major yet, but we will see. We're still, Capital Box in the B2B unregulated market at the moment, so we have some place to have the sandbox and playground.
Wish you good luck then with all of your endeavors. Rich, what's about you? What's your vision for this question in terms of everything connected, staying on top of all the growing global regulations and responsible technologies?
Sure. There's, I think about some of the differences between the EU and US regulation when it comes to data. I think in the EU, there's a much stricter protection of individual data. And where the conflict, the contention is between companies and regulators is especially an appetite to want to take that data and market and generate more revenue. And that's going to be an ongoing battle and discussion. And can you use AI to help assuage the fears of regulators in the EU that we're going to be respectful, we'll only use it for these purposes. Those AI give you more control over that process. I think that's going to have to be discussion and a negotiation. And it links back to, I think, as Julia said, it's not something new, it's an ongoing one. So not to oversimplify, but I see that coming from a business perspective. When working in the EU and understanding what I can do with my data, I'm concerned that it might take some revenue opportunities away from me because my marketing is limited and it's putting more costs on me. When I look at the US, the regulation has been more financial in terms of what can I charge for something, but also when it comes to data, it's about exposures and losses and data breaches. So that's a higher priority. And what can you do? And in a way there, maybe that's more working hand in glove with regulators. Everybody would like to reduce the fraud. It's not so much taking it away. Maybe the only shading I'd put on that is if you're the financial company, you want to find as much as you can to make sure if something happens, you don't blame me. Although what happens in the US generally, or in most cases, if there is a loss, whoever has the most money is going to be gone after to try to get funds to recover. So summarizing it, I'd say EU, it's regulation around how you use data to market, and you have to build a good relationship. Regulators respect what they're trying to do, respect the end customer. In the US, I think it's been more around reducing financial risk in terms of data breaches.
Fully agree. Really, sometimes building relationships with your regulator means more than complying with regulations, but it's another story, not for this webinar. Let's keep it. We are coming closer to the third part of our discussion, which is related to the future of banking and finance. And it smells like the biggest names in finance might soon not be banks. Because here is a good example. The British multinational fintech Revolut plans to launch banking operations in Mexico already this year. They've got all the license for that. And for me, it's clear that fintechs are stepping into the neobank space, while NBFIs are eyeing the market share of traditional banks. And technology is the game changer here. We've discussed it within the session. Take DeFi, for example. It shifts basic financial services onto the blockchain. No need in the bank, just smart contracts. No lender, just peer-to-peer borrowing. It's another scheme of alternative financing. Julia, taking that, what's your vision for the future development of non-traditional banking, and what's your attitude towards this new attack like DeFi, decentralized financing?
So what we will see in the coming future depends. So banks and financial sector will be decentralized, right? So we will rely more on the partner data. We will rely more on the partner services instead of using and buying the entire building, the everything in house, which the biggest, oldest bank had. It's usually building all the pieces at home, which creates a legacy part because it's very hard to change, right? So the connection, Rich mentioned, some questions before. This is what, this is the partners that we need to find out, but it's also the possibility to have the different partners, or maybe even to have partners, in parallel for the same services, just in case. So this is at some point, this is decrease the cost of like the operational cost, because you do not need to maintain all the people in house building the stuff, maintaining, supporting. You can still like rely and buy services from outside. And this is why like neobanks, fintechs has this ability, because they haven't yet built the legacy to support, so they can take these functions from the different services, right, from the different markets, to maybe to take some AI models, not to build them in-house, but to buy this, right, to invest in those, right, to get the share part in those, to get some, part of the business through the mergers and acquisitions, right? So to take it from the different parts, right? And this is where these small connections, like, starting to be more like a puzzle, where you can change one puzzle or another. It's easy to say, right? When we step into the contracts, it takes a lot of time to build the contracts in regulated markets. But at the same time, this decentralizing of one ownership on everything will come into force. All right, not always relying on the risk decision, and as an example, but be able to maybe analyze the same data for 3 different sources and see in parallel which works for you better, which has never been imagined like 5 or 10 years ago even. So this refocusing on how to use other businesses is what should happen in the very near future. And embedded is just the one. We haven't spoke more about like behavioral data, which is a risk. We spoke like US and EU, and the behavioral data that we can get from embedded finance is amazing, but it's also points to the risk. But it's another point of the data we have never been analyzing 10 years ago in such details. Which apps do you have in the phone? Maybe this correlates with your ability to pay, right? So this is also makes the difference. And having all of this structural data will bring you more opportunities in the future. So yeah, the future is bright. So we will see just how much time it will take us to see more options than the challenges, and more opportunities toward the better results, and the higher revenues we all hear for the revenue streams, right, for the profit.
Well, such a wide overview. Thanks, Yulia, for insights. Taking your long years in finance, your feedback is valuable for our attendees. By the way, while interest in cryptocurrency may have cooled, it's still relevant today, especially in banking and finance. Maybe you heard Rui, a digital bank based in the Middle East, now lets customers buy and sell cryptocurrency, plus trades select digital assets, including Bitcoin. Rich, we've talked a lot about technologies. You also touched base on cryptocurrency. From the point of both an expert and a user, what's your opinion on the future of crypto in banking and finance?
I think there's a divergent path. You can start with blockchain, the underlying technology, and then you have a crypto, more of the Bitcoin versus stable coin. And I've been a crypto skeptic coming from the seat of a payment person. I don't see Bitcoin being a very efficient way, slow, but it's a speculative investment, and it's in that package. Stablecoin to me makes more sense. I'm starting to see that come into focus, and it is a more effective medium of exchange and store of value compared to the other crypto. And to me, it's almost like a branch on a tree of evolution, and there's Bitcoin going that way, and then stablecoin going another. And what I think you see with stablecoin is more of a productive integration with central banks. That's where you've gotten more of an embrace and saying, okay, we're going to go after this. And I'll think in terms of a couple central banks. 2-3 years ago, Nigeria and South Africa didn't want anything to do with cryptocurrencies. And now they're both embracing it. And if you add in Kenya and if you track stablecoin flows, those three economies are some of the leaders in number of users and flows going through. And what you've seen with that, it's becoming embedded in a treasury flow, moving funds, as opposed to being a speculative investment. And if I had an analogy, it's something like gold and currency. And gold sure looks nice, but you're not sure, and it's hard to buy something with gold. You have to break it down, etc. But with the currency, it's much more fungible, transmission and accepted. And then a big change in the U.S. with a new government and an embrace of blockchain and crypto. And I think that central bank role is very important. Again, I'll put the Bitcoin aside, but I think stablecoin is something that the Trump administration has seen has an impact on the role of the U.S. as the world settlement currency. And they're embracing stablecoin because they see the impact on treasury flows, and they want to make sure that the dollar is still what you want to denominate those trades in. So I see a much longer and sustainable growth for stablecoin. But to be successful, and echoing comments Julia's had and some of the questions we've had in the chat, to do that, it's not just a matter of having the right technology, and it's also following the regulatory path. And some of the challenge there is that it's not been defined fully. It's still being defined. And then I think the biggest hurdle around stablecoin is going to be liquidity to fund these trades. And I'm starting to see more companies get involved with that. So I look at stablecoin and think that's where you may come back to the question about banking. Who will the new banks be? And if you look back in the industry of technology 40 years ago, IBM was the big company, and who's IBM now? Or Microsoft, still good. Who's going to adopt? But the biggest players are companies that didn't exist 20 years ago. So I point to stablecoin as the use of blockchain that's going to have the most impact, and we'll see. That's where I'm looking at right now.
Thanks, Rich. Let's hope you banks is listening. Might be time they offered you something more personal, especially in terms of investments. Anyway, we are wrapping up, to be honest, and it would be really nice, guys, because it's already an hour past, right? And we covered almost everything we wanted in accordance with our agenda, starting with past, present, the future, included embedded finance, super apps. We know that the rise of super apps forecasts a future shift towards more integrated and user-centric financial services. Revolut, again, Revolut is everywhere right now, as Kalana. Revolut has expected its offering to include phone plans, instant messaging, trail bookings, and others into their apps. Rich, Yulia, a question to you. In your opinion, what unexpected partnerships should we wait from future super apps and embedded finance technologies?
I think, currently we still trap ourselves into some obvious, expectations like, cars and finance, I don't know, like sales and collection. So everything which is kind of natural and just like an extension. So, but the super apps should go more crazy and should go more wild with totally unexpected solutions, with merging the services that you wouldn't think. It's like the Starbucks having one of the the biggest amount of cash in as the cards, right? So which is kind of insane, because you never would thought that like a coffee shop would have so much cards as basically the credit cards. So being like a bank at this perspective. So it will totally change the perspective it will change when we will change our perspective on the business and our usual flows. So as faster we go and expand our capabilities of thinking more more curious, right? More, into the different paths, the wider will be the options that we will see in the super apps. So it can be, from taking loans so while drinking a coffee, charging nearby your electric vehicle, and also maybe cycling at the same time in the some gym or something. So this is what combination of totally different unexpected areas might create a bigger value, but it's still the way to come, and just like our intelligence, curiosity, and ability to ideate and ability to discover new things, this will show how much time it will take us to be there.
Thanks, Yulia. Really sounds interesting. And let's see what's going next. Rich, what's your vision on super apps partnerships in the future?
Oh, I'm enjoying Julia's vision. I think it's very exciting. My thoughts were drawn to what these apps may allow you to do to combine different flows of value creation. That and it has precedence. I think about co-branded credit cards, where you had an airline combining with a credit card, and you created a whole new currency called points and reward and miles, and that then allows you to not being locked into one vertical. What do you do that maybe allows you to maximize the value you can bring to a customer and redefine that relationship? So I think the apps allow you to put together different revenue streams and different aspects of a customer relationship. The caveat is, does the customer want that? And then two, I think it may increase the value of brands that, who has that relationship with the customer. And you find a brand like Starbucks that has grown much beyond serving coffee in Seattle, that it's become a place where you can you can hang out, connect, and then you become invested in it through the points you've gotten. So when I come back to the super apps, I think it opens up the ability to provide some very interesting combinations of services to customers. And it's happened in the past, but I think it can happen so much quickly now because of the ability to do it digitally and almost instantaneously.
Thanks, Rich. Guys, a piece of advice from both of you. Yulia, a piece of advice for those who are NBFIs, what to do for them to get prepared for the future. And Rich, for you, a piece of advice, please share your recommendations for those who are trying to navigate in this competitive market. I mean, those who are just planning to enter the stage, become bank or become a non-banking lender. So, Yulia, let you be the first.
Okay, so listen to your customers, know what they need, and go wild. Right, so try to innovate as much as possible by knowing where your customers are going and help them to grow and creating them additional value. So with this value, you will also get an additional loyalty and additional value of the revenue.
Thanks, appreciate it. I hope so by all our listeners. Rich, what about your piece of advice?
Oh, I like that. That the customer to me is that destination, the goal. And then I'll bring in advice. I think about my father telling me when I was first learning how to drive, it was, make sure you have a good map and you have enough gas in the car. And I translate to the map or the GPS is know the regulations, follow the rules, and know who you need to work with there. And then gas, that's funding. Make sure you've got the cash you need to keep the business going and growing. So put that together, have the right destination, your customers, Julia would say, and then stay on the good side with the regulators and make sure you've got the money. Show me the money and you'll get there.
Fully agree. Thanks a lot, Yulia. Thanks a lot, Rich, for joining us today, for your insightful conversation, fresh insights, really based on reality, not based on ChatGPT conversations. Those who are listening to us today, remember, a bank license won't make you millions overnight, but a client-first approach and smart automation will keep you in the game, because hoping for profits without them is like waiting for a loan approval from your cat. It's not going to happen at all. So thanks a lot for joining. See you next time. Bye-bye.
Thank you.
Bye-bye. Thank you.